FRS 105 is the microentity standard. So the idea behind the FRS 105 is that it is a much simpler financial reporting framework than FRS 102. Now, just stepping aside slightly, just so I can describe this in an audit context, FRS 105 is viewed as a compliance framework, whereas FRS 102 is viewed as a true and fair framework. And the difference between the two is that if you comply with FRS 105, the financial statements are presumed to give a true and fair view. Under FRS 102, the directors are required to give a true and fair view, and therefore it's in their professional judgment to consider whether there are any additional disclosures beyond those that have already been made in the financial statements required to give a true and fair view. So the directors have got a lot more to consider in terms of FRS 102. FRS 105 is very prescriptive. It basically tells you what you should be doing as a micro entity. So for example, there are no accounting policy options as there are in FRS 102. So things like development costs, which you can capitalise or write off to the P&L account under FRS 102, you must write them off to P&L under FRS 105. This is going to be music to many accountants' ears in that there's no deferred tax under FRS 105 because it's viewed as being too complex for micro entities. I remember teaching this once and it was like, there was like cheers in the room when I said deferred tax is outlawed, but only in FRS 105. It's still there in FRS 102. There's this presumption of giving a true and fair view under FRS 105 because of the deeming provisions in the microentities legislation, which we don't have in the small companies regulations under FRS 102. There's also additional accounting policies that are outlawed in FRS 105. So for example, you can't revalue assets. So if you've got an investment property on your balance sheet as a micro entity, you've got to measure that under historic cost, i.e. cost less depreciation, less impairment. But under FRS 102, you've got to measure it at fair value. You can't use fair values or revaluation amounts under FRS 105 because the microentities legislation doesn't allow it. So accounting policy options are a no-no under FRS 105, which is basically why there are no accounting policies to disclose under FRS 105. In terms of the format of the financial statements, the profit and loss account under FRS 105 is a Format 2 profit and loss account, and that's the only one that you can use, which is expenses by nature. Whereas under FRS 102, you can use either a Format 1, which is expenses by function, or a Format 2. Okay, so like turnover, cost of sales, distribution costs, admin expenses, all that sort of thing is a Format 1. So it's quite rigid under FRS 105, no accounting policy options and some very prescriptive accounting treatments, whereas in FRS 102, there's much more in the way of accounting policy allowances, if you like, where entities are free to choose which is the best policy for them in their circumstances.